Hello students. In this video, we'll be talking about Chapter 2, Fundamentals of Partnership Firms. The subtopics to be covered are calculation of interest on capital and an example based on it. First, let us find out that what interest on capital actually is. Interest on capital is basically an appropriation. It is to be paid by the firm to the partner. Interest on capital is always calculated on the opening balance of capital, and if there is any kind of additional capital or drawings out of capital during the year, then that is to be taken into consideration before calculating the interest on capital. So whenever additional capital or drawings out of capital is given, we will also take into consideration the time factor. In case in a question the closing balance of capital is given, we need to calculate the opening balance, which can be calculated by applying this formula. Opening capital is equal to closing capital plus drawings plus profit or minus the loss. The journal for interest on capital is as follows. Interest on capital being an expense is debited, and since the partners receive it, therefore partners' capital account or current account is credited. Interest on capital being an appropriation is transferred to profit and loss appropriation account. Therefore, for transfer of interest on capital, the journal entry is profit and loss appropriation account DR to interest on capital. Now, if in a question nothing is given regarding interest on capital, whether it is a charge or an appropriation, then we always assume it to be an appropriation. Because it is an appropriation, therefore, in case of losses, interest on capital will not be allowed. When the profits are sufficient, then interest on capital will be allowed. But when the profits are insufficient, then it will be allowed, but only to the extent of available profits and in the ratio of the interest on capital. If interest on capital is a charge against profits, that is, if in the question it is mentioned that interest on capital is a charge, then since it is a charge, it will be allowed whether there is profits or whether there are losses. So when the profits are sufficient or insufficient or there is loss, interest on capital will be allowed. Please note, interest is not allowed on partners' capital unless it is expressly agreed amongst the partners. So if it is mentioned in the partnership deed, then it is allowed, otherwise it is not allowed. When the deed specifically provides for it, then interest on capital is credited to the partners at the agreed rate with reference to the time period for which capital remained in business during a financial year. That is, we need to take into consideration the additional capital introduced and the drawings out of capital before we do the calculations for interest on capital. Interest on capital is calculated with due allowance for any addition or withdrawal of capital during the accounting period, as I already explained to you. Let's take an example. A and B are partners sharing profit and losses in the ratio of 3:2. Their capital accounts showed balances of 1,50,000 and 2 lakh respectively on Jan 1, 2012. Now, since the capital is given on Jan 1, 2012, therefore this means this is the opening balance of capital. Show the treatment of interest on capital for the year ended December 31, 2012 in each of the following alternatives. Now, since our accounting year ends on 31st of December and the capital account balances are given on 1st of Jan, so the opening capitals are given in the question, so we do not need to calculate the opening balance of capital. Now, the first case is if the partnership deed is silent as to the payment of interest on capital and the profit for the year is 50,000. Now, since the partnership deed is silent, there are no provisions for interest on capital. Therefore, interest on capital will not be allowed to the partners. The whole amount of profit will, however, be distributed amongst the partners in their profit sharing ratio. There will be no appropriation out of 50,000. The whole 50,000 will be distributed amongst the partners in their ratio, that is 3:2. The second case in the same question is, if the partnership deed provides for interest on capital at the rate of 8% per annum and the firm incurred a loss of 10,000 during the year. Now the partnership deed provides for interest on capital, so it can be allowed provided there are profits. But in the question it is given that the firm incurred a loss of 10,000. Now since the firm has incurred losses, therefore interest on capital will not be allowed to any partner. The losses of 10,000 will, however, be shared between A and B in their ratio, that is 3:2. The third case for the same question, if partnership deed provides for interest on capital at 8% per annum and the firm earned a profit of 50,000 during the year. In this case, the interest on capital for A and B can be calculated at the rate of 8% on 1,50,000 and 2 lakh respectively. The total interest on capital is 28,000. As the profit that is given in the question is 50,000, which is sufficient to pay the interest at the agreed rate, therefore, the whole amount of interest on capital shall be allowed and the remaining profit, that is 22,000, shall be shared between the partners in the ratio of 3:2. Since in this example, sufficient profits were there, interest on capital was mentioned in the partnership deed, therefore it has been allowed to the partners. The last case is if the partnership deed provides for interest on capital at the rate of 8% per annum and the firm earned a profit of 14,000 during the year. As we have already calculated the interest on capital, the total of which amounted to 28,000, that is 12,000 for A and 16,000 for B. Now the profits that are available to us are 14,000 and interest to be provided is 28,000. Now since interest on capital is an appropriation, it cannot be provided more than the profits that are available. Therefore, the interest will be allowed, but to the extent of the available profits, that is 14,000. In the ratio of interest on capital. Now, this 14,000 will be divided between A and B in their interest on capital ratio. Now, interest on capital ratio would be 12,000 is to 16,000. So, in this ratio, 12 is to 16. In this ratio, 14,000 would be distributed between A and B. Thus, A and B will be credited with 6,000 and 8,000 respectively. Effectively, these amounts to sharing the firm's profits in the ratio of interest on capital. The profit of the firm was 14,000 and the whole of the profit has been distributed as interest on capital. So nothing would be left to divide further. I hope the concepts are clear to you all. In case of any doubt or query, you can contact me on my email ID. Thank you so much.